activist investors like Elliott and Dan Loeb's Third Point, they tune in to the investor channel because they saw exactly what we saw with CRM, and they are forcing this company to make changes. And we're seeing after hours after the company reported their Q4 earnings, shares of Salesforce.com, ticker symbol CRM, are popping up over 13%. Talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. Now, obviously, I'm joking a little bit. I don't think Elliott Management and I don't think Dan Loeb's Third Point are tuning here to the channel, but they are looking at the exact same things that we've talked about here on the channel with Salesforce.com. The difference is these guys have the power to make board decisions, to acquire large amount of shares in Salesforce and force the change. Because those of you that have been tuning in the channel for any length of time and viewed our previous videos that we've done on Salesforce.com, there's a lot to like here, okay? So you had Q4 revenues come in at $8.38 billion. That was 14% growth year over year in a difficult environment. It also beat expectations by 390. When you start looking out several quarters for Salesforce, look, it's not one of these mega high-flying tech stocks like it used to be, but you've got kind of like, you know, real low double-digit, maybe high single-digit growth out in the foreseeable future for Salesforce.com. But in the past, you were really paying up for this from an earnings perspective because as I'll walk through, and I've walked through numerous times here on the channel, yes, you have strong revenue growth. Yes, you have really, really strong gross margins, but it all gets chewed up in operating expenses to where you basically make no operating profit. And in fact, a lot of times you're losing money and then you pull all the way down to a net income and you've got negative EPS. And activist investors, they look at this. They don't watch the doom and gloom content that is popular here on YouTube or the real clickbaity kind of finance stuff here on YouTube. I'm not going to tell you not to watch this stuff, but if you want to become a great investor like Elliott, like Dan Loeb's Third Point, you want to become an elite investor, you ignore a lot of the noise and you immediately come to the company's financials, which again came out after the bell. These Q4 numbers, $8.38 billion worth of revenue. Again, that was 14% growth year over year. It beat expectations. Again, what we love about Salesforce.com is the fact that they have these mega gross margins. Off of this $8.4 billion worth of revenue, we spent just $2.1 billion. That gave us gross profit of $6.3 billion. Last year, it was about $1 billion lighter than that at about $5.3 billion for the full year. Just steady growth over here in a difficult environment. Okay, it's not the easiest environment. Not breaking news there. 19.5 up to nearly $23 billion worth of revenue for the full year. The problem we've always had with Salesforce.com, and maybe I need to get better at this as an investor, is showing you that, look, when you identify companies like this, I haven't invested in Salesforce because I felt they needed to turn some things around. Research and development, basically flat kind of quarter in the most recent quarter. So it's showing you this activist pressure where they're going to get nominees on the board. They're going to force Mark Benioff to make some changes. He's laying off some employees and he's going to grow the earnings over at this company. And so it's a very positive direction. We see in the most recent quarter, they're making those changes very quickly. Research and development expenses basically flat. Your marketing sales costs actually went down. You see for the full year, this is not the pace that they were on. They were increasing these over the previous 3 quarters. They've started to rein these in. General administrative actually went down in the most recent quarter. You have some restructuring charges here as well, which will, peel off in subsequent quarters. So your total operating expenses coming in at $5.9 billion. That is still up year over year, but the vast, in fact, almost all of that is this restructuring charge, which again, if you strip that away, we went from 5.5 on the operating down to 5.1. As it is, as written, you take $6.3 billion in gross profit, you minus off about $6 billion in operating expenses, and you have about $357 million worth of income from operations. Last year, you lost a little bit of money, but again, off a company that does $23 billion in gross profit, $31 billion in change in terms of revenue, you made just $1 billion on this. And this is what activists see, is they have this huge gross margin and they've got to start peeling away on some of these operating expenses. You pull down to a earnings per share for the quarter and you lost money for the full year. You made just 21 cents per share. But again, this is what activists look at and this is what gets them excited. And maybe here on the channel, I've got to start to adjust. When we start to see stocks like this, it could be a turning point in terms of activists getting involved. Now, it's difficult for me to time that and predict that, but that certainly is how it played out with Salesforce.com. When you come over to the balance sheet, lots to like here, okay? You couple the fact that an activist can come in and rechange some of the operating expenses. They've got a very healthy balance sheet from a cash perspective, from a very low amount of debt perspective, nothing to really be concerned about from a balance sheet perspective. And then when you come over here to the cash flows, this is how most of these tech companies want you to value them, because they're going to be able to strip out things like depreciation and amortization. They're going to be able to strip out this stock-based compensation expense as well, which came in at $800 million in the most recent quarter. So you get to add that back in dollar for dollar, like these people would work for free somehow. And then for the full year, you get to strip out like $3.3 billion worth of stock-based compensation. So from a cash perspective, yeah, it looks pretty good, from $2 billion up to about $2.8 billion. Again, another thing that investors and certainly activist investors like, a healthy balance sheet, healthy gross margins, just a company that needs to rein it in a little bit. And it's showing me in the most recent quarter, that is exactly what happened with Salesforce.com. They've reined in these operating expenses. Mark Benioff is listening. To his credit, he is listening and he is making some changes over at this company. Now, from an investing perspective, the other thing that activist investors like is the repurchase of common stock to the tune of over $2.3 billion in the quarter, $4 billion in the most recent year. During the most recent earnings announcement, which again came out today, they increased that share repurchase program to $20 billion. So these are all things that are going to add up to Elliott being happy, Third Point being happy, and ultimately shareholders being happy as well. This stock closed today at about $167 per share, and I'm showing you on the graph here because it might be kind of hard to see unless we really zoom in. The stock is actually trading up towards this green line. We're up, boom, over nearly 15% on this one, and it's looking great from a technical perspective. A lot of stocks that we've been looking at have been locked in kind of downward channels. This one pulled back into that kind of green box that we mark out on a lot of stocks where it's kind of a buying zone. I didn't step in on this one. Pat yourself on the back if you did happen to get this one south of today's price. This one's popping up here 15%. I wouldn't chase it at this price. There is a clear level of there's multiple areas of resistance at 167. 167 was like a comfortable area. Now, like Nvidia and maybe a couple other stocks that we're looking at, could it continue to power up through this level? Yeah, I guess. I think your upside is back to these lows here up to like 200 or so. So that would still be quite a move. I think more than likely you stall out at these levels and you have some kind of subsequent pullback with CRM. Your first logical area is to close this gap that we created, get back to like 170, a little bit deeper than that. You're looking at 165, but this appears to me like the start of an uptrend. It's not going to be one of these V-shaped recovery uptrends, although I guess that's certainly possible, but it's looking like to me the stock market is trying to reverse. It's trying to bottom out. Could we come back down here and retest these areas at 150, even 130, 140? Certainly, but I think it would give you a lot of confidence after the move that we had. CRM is still not perfect from a financial perspective, okay? They still got a ways to go, but this quarter showed me that management is listening, and any significant pullback in CRM, the problem is CRM pulls back, Microsoft's probably pulled back, Google's probably pulled back, Apple, like pretty much all these other tech companies that have even larger buybacks and a dividend and maybe even a bigger moat and a bigger gross profits and more earnings, they're probably going to pull back too. But if you want to fit Salesforce into your portfolio, if you're somebody that's been patient, you've been wanting to get into this name, or you already own this name and you want to add to it a little bit more, well, I think we actually finally saw some signs that this company is going to turn the corner. It's not there yet, but boy, it is close, and they are getting there, and Wall Street is rewarding them after their Q4 earnings. Again, stock up over 14% during the regular trade. This thing was up 2.3%. We'll certainly be back next time they report earnings to report it again soon. We'll see you again on Friday here on the channel for our FANG Stock Recap Show. Thanks for tuning in. Good luck with your investments.